YouTube is full of these viral strategies that claim to make huge profits, but do any of them actually work? This series is going to put them to the test. Live markets, real trades, no filters, and the results will shock you. So let's see which ones hold up and which ones blow up. So the strategy we're going to test this week, guys, is this one, the proven 4-hour trading strategy with an 85% win rate that you can start today. So we chose it because it has a very high win percentage, and we are going to test this in the live markets, and it's simple to trade. The fact that it's on the 4-hour chart might also make it ideal for people at work and can only trade a handful of trades each week. So lots of reason why we chose it, but let's see if it holds up or blows up.
This 4-hour chart strategy I'm going to talk about involves two moving averages, the 5 SMA simple moving average and the 50 SMA. Now, the 5 SMA moving average basically is a short-term moving average that dictates the market's short-term momentum, while the 50 SMA is a longer-term moving average that reflects the overall trend. So when the 5 SMA crosses above the 50 SMA, like you see in this dollar-yen chart, it means that the short-term trend has turned positive, and you should be looking for opportunities to go long, but there's a little wrinkle that I will share later. Meanwhile, when the 5 SMA crosses below the 50 SMA, as you can see in this euro-dollar chart, it means that the short-term trend has turned negative, and it's time to look for opportunities to go short. In this euro-dollar chart, you can see that the entry in the short was around 108, and the currency pair hit a low of 107.33, a nearly 70 pip profit on this short trade. As you can see, this is a simple yet effective crossover method that helps you identify potential trend changes and momentum shifts. This strategy works particularly well for euro-dollar, pound-dollar, and dollar-yen, but there is one wrinkle.
All right, guys, real quick, before we continue, if you're watching this and you understand price action, but you can't stay consistent, you know the setups, but you keep giving back your gains, then listen up. On November 24th, I'm opening the protocol room. This is the exact system I use to trade every single day. The same approach that has made me a Forex analyst for investing.com. It's not another strategy, it's structure, strategy, risk and money management, and psychology, the three areas that give you a trading edge. And look, I'm only taking a small group because this isn't about cramming hundreds of people into a Discord and calling it mentorship. This is proper guidance, the kind that actually fixes the cycle of winning for 3 days straight, then blowing it all in one revenge trade. I've worked with traders who have had the exact same problem. They didn't need more chart analysis, they needed discipline, a system they could execute under pressure, whether they've just won or lost. The waitlist opens now and spots are limited. If you don't fix this now, you'll be having this same conversation in 6 months. Still inconsistent, still stuck in the same job. Don't let that be you. Links in the description, sign up today. Now let's get back to the vid.
Which is that after the 4-hour candle shows the 5 simple moving average crossing below the 20 simple moving average, you don't just want to take the trade. You want to wait for a retrace back to the 5 SMA. Sometimes this retrace could be a big retrace, but oftentimes it's a shallow one. Before we look at the charts, let's talk about the stops and targets. The entry for day trades and swing trades would be the same, but the trade management would be different. For day traders, the setup is straightforward. Use a 30 pip stop loss and a 30 pip target for a 1-to-1 risk reward. That's what I suggest. This approach keeps your trades simple and easy to manage, allowing you to capitalize on the precisely small moves efficiently. Now back to the euro-dollar chart here. You never got the opportunity to sell on a retrace to the moving average, so it wasn't a valid trade. However, taking a look at the same chart, 7 out of the last 7 trades were winners. Here's the examples. This is the first euro-dollar trade that we mentioned earlier. And this is not about a valid trade because it dropped significantly before it retraced, and it's just, this is far too long on a 4-hour time frame basis. Here, however, we do have a valid trade. The setup where for the 5 crosses above the 50 happens here. And then we go along the next candle pretty much at 108.45 plus 30 pips is 108.75. So we're exiting first half the position here and the second half somewhere over there. Here is the next trade. Here we have on this candle, the the moving average, the 5 SMA crossing below the 50. And then we're going short at 108.39, which is where the 5 SMA is the next candle. And you could see this low is 107.88, so 30 pips easily hit as well. Here we have the cross right over here, so we're going long.
Okay, guys, you get the idea. Let's test it. Will it hold up or will it blow up? Can this strategy really give us an 85% win rate? Well, let's find out because I'm about to share the results now. Before I do, guys, if I could please ask everyone to subscribe to the channel, smash the notification button, and please smash the like button. It really helps support the channel. Also, guys, please leave a comment. Maybe you've tried this strategy or you would like me to test another strategy. Please leave a comment down below. Also, guys, come join our trading community. We've got a free Discord channel, so come join that. And please check out our website if you want access to all of our premium trading education. All the links for all of these things are in the video description. Right, so the results, the moment you've been waiting for. Let's look at a couple of trades first, just to confirm the strategy, right? So let's first of all look at this buy trade here. Remember, the yellow line is the 5 SMA and the blue line is the 50 SMA. As soon as we get this cross here, we are interested in buying. But the next stage is a retrace to the 5 SMA, which we get as well. All right. And as you can see, we either make 30 pips, right, again, as per the strategy, or we lose 30 pips. So 1:1 risk to reward. Okay. So as you can see, guys, this was a winning trade. And yeah, if you risk 1%, you would have made 1%. So there's a buy trade. Let's have a look at an example of a sell trade. So again, we've got the 5 SMA, right, crossing the 50 in here. And then price comes down, and then we're looking for the retrace to the 5 SMA, and you just enter, right? There's no entry criteria. It's just when it hits that 5 SMA, you start selling, right? 30 pip stop loss, 30 pip profit, and as you can see, again, a winning trade, right? The next one was a losing trade, and so on and so forth, right? We tested this for a little over 2 months, okay? And you can see all the trades I took here. Here's one, here's one, here's one. These were all live trades in the live markets. There is an area here I want to point out, right? Because, you know, you do get a cross here and you even get a cross there. But what we want to see, guys, is the 5 SMA properly leave the 50 SMA. We need to see some clear, you know, daylight between the two moving averages and a push away from the 50 SMA, right? Like we get here, you can see a clear push away. Like we get here, you can see a clear push away. Like you see here, we have a clear push away. So this scenario you want to stay away from. I also want to share this scenario, guys, right? This strategy is not going to do very well when you get the 5 SMA keep crossing below, then above, then below. Both of these were losing trades. But like any strategy, that's fine. You're going to have them. And as you can see, guys, you can see all the trades for the rest of the month there as well. So like I say, guys, traded this for a little bit over 2 months, and the results are as follows. So we had a total of 10 trades over 2 months. So you're getting a little bit over 1 trade a week. Now, obviously, that's not a lot of trades, but who cares if they're winning trades? But if you wanted to increase the amount of trades you have, then you could adopt this across more pairs, right? She mentioned pound US dollar yen. You could even back test it across some yen pairs or, you know, euro Canadian dollar, all right? But do your back testing, guys, like we've done here. But in those 2 months, we had 10 trades. We had 7 winners and 3 losers. And you don't need to be a mathematician to know that is a 70% win rate. Now, obviously, this isn't as high as the the claims that they made of 85%, but who cares? 70% is a very nice win percentage, and you will make profit trading that system if you trade it to the letter. And as I showed you in the trades we took over the last couple of months. And we did actually do some further back testing. We actually back tested it for 6 months, and it ended up getting a win percentage of a little bit over 64%, which is very nice win percentage indeed. So if you said to me, Tom, does this strategy hold up or does it blow up? Then this one definitely holds up. And if you want to see all the strategies I test throughout this series, then please stay tuned, guys. Please subscribe. Please hit that notification button, because we're going to test some other great strategies in the coming weeks. If there's any strategies you want me to test, please leave a comment below, and I'll see you next time.